Hello and welcome back to the course. In the previous section, we learned about the controlling aspects and some of the drawbacks. In this section, in this video, we will be looking at what are the things that are not recorded in balance sheet. Okay, so what's not in the balance sheet? Customer list and goodwill in the business. So there are a lot of customers which they are valuable customers which rely solely on your company, and that gives a very big value to your company, that are not recorded in the balance sheet. But you may be able to sell the customer list, you may be able to sell the goodwill, but that you cannot record in your balance sheet because you are not paying for that. You are just earning that out of a period of time and trust you have been trying to maintain those customers. Longer the customers, higher the value it is. Future earning capabilities of the business. So the balance sheet also does not recognize this very important aspects while we consider when we do the valuations. What are the future earning capabilities? Because the balance sheet is a historical thing. It's recording only what has been done already. It is not going to record what are the possible things. Those are covered in the business planning forecasts, for which we will be doing another course on the financial planning and the business planning, where we'll be looking at the future earning capabilities of the business. Management talent and workforce skills. Even though in the real world we say that human capital is the biggest asset of the business, unfortunately balance sheet does not recognize that. There is no recognition for the skills that there are skills that we train, we charge that to expenses, but we can't recognize that as an asset because there is no accounting standard which can value the workforce skills or the management talent. But also that is temporary, because if the management leaves, those talent people leave, you are making a loss. But if they stay with you, there is no value to them, or you cannot make any value you cannot assign them a particular value. But you should know, right? You should know about it. Good industrial relations means the memberships of many chamber of commerce, your inter-competition relationships, your partnerships. Those are also not recognized by the balance sheet. Real economic value of the fixed assets, because as we discussed in the detailed part of the balance sheet while we were discussing the fixed assets, the balance sheet does not recognize the actual value of the fixed assets once after they are bought. So unless you are doing a revaluation, you will not know the actual economic value of the asset, or how much future earning value of the machines. For example, like you buy a machine now, the machine is worth $10,000. Over a period of time, you are depreciating the value. So at the end of 5th year, probably the value depicted in the balance sheet is only half. But the life of the machine is still there, and the economic value of the assets is the future earning capabilities discounted at whatever exchange rate, whatever interest rate. So that value may be much higher than the value of the business. So when you are looking at the balance sheet, you need to bear in mind that it will not give you a real value of the fixed assets or your property or your machines. Brands, logos, trademarks built up in the business for which you have not paid anything. So those are also not recognized by the balance sheet as an asset, but they are actually your asset. If you're going to sell them in the market, you may be able to make a lot of value. Copyrights, patents, they are some. If you are paying to acquire a registration cost, you can register them in your fixed assets, but only the value of what you have spent, not the real value of if you're gonna sell these values. But because there is no accounting standard or no accounting principles that can recognize or that can value those things. Okay, some of these things are actually covered in annual reports. When you look into the details of the annual reports, if you read the management discussion and analysis, you will be able to find the customer list probably the major customers. You will be able to find the future plans of the business where you can estimate the earning capacity. You will know a lot about the management, but only the top management, not the workforce skills. But nowadays a lot of companies are putting up their training plans, what kind of training they are doing into the value. You may not find the value of relations or value of fixed assets. But you may be able to find you may not be able to find the value also of brand logos and trademarks, but you may be able to find the list of them. That's the only thing you can find, but the valuation you cannot find. So these are the inherent limitations of the balance sheet, which makes them kind of redundant, but we still value them, we still use them for certain analysis, because to a certain extent they represent quite a fair value of the position of the fixed asset, position of the business, and they help to analyze the value in details. Even though there are a lot of things which can be more valuable than the physical balance sheet, but for our course we will be learning the balance sheet. Now we will be learning more about how to analyze the balance sheet in deeper details when we will looking at the ratio analysis chapter. So stay tuned, and in the next video we will be learning about the profit and loss. So I'm still excited. Thank you.